ICE Brent crude oil futures. A conundrum on Friday. It was an attempted bearish dark cloud cover pattern, but also a possible shooting star pattern. Once again, as in the previous session, whether it was an attempt at a type 1 bearish or type 2 bullish is still yet unclear on both of them. Prices halted their move up from the lowest low and low close since December 2021, punching up through the December 2023 low at 72.29, but failing at even testing the next congestion band overhead between 73.36 to 73.73, and that's containing the May 2019 high at 73.38 and the 50% absolute Fibonacci line at 73.73. After failing to test up there, prices reverted back down below the December 2023 low and pushing further down below the September 2019 high at 71.99 and the 2020 high at 71.75, and finally finishing right on the breached dark blue lower time, currently 71.47 at the mid-April to early July bearish shift pitch walk. We're also still in between the bright red middle tine above, currently at 69.72, and the bright red middle tine below, and that's currently 69.72, and the bright red upper tine above, currently 77.66 of the steeper bearish Andrews pitch walk for the same move as the dark blue bearish shift pitch walk. Now looking below, we next have support at the March 2023 low at 70.13, just before the bright red middle tine. Now, I reported 2 weeks ago how the tines of the two pitch walks crossed in the middle of 3 weeks ago, and how it was not unusual to see volatility when such tines crossed. I warned you in advance that the next crossover would be on the 12th of September, to watch out for some potential volatility. Well, it seems that this volatility has come about, if a couple of days early this time. So far today, a higher open just over the September 2019 high, but the market seems stuck in between the congestion area between roughly the December 2023 low overhead and the 2020 high below, possibly extending down to the dark blue breach lower tine. Spot gold. A bullish opening white Mariposa on Friday after the previous session's dramatic bullish open and close long white Mariposa. Prices yet again made a new all-time high and high close. This time they utilized the lesser projected Fibonacci line at 25.57 as a base and managed to push up over the more recent 50% projected Fibonacci line at 25.79, but failed on approach to the older 100% projected Fibonacci line at 25.87 and dropped back to close just below the more recent 50% projected Fibonacci line at 25.79. This is all further evidence that the market is staging a break higher from the previously well highlighted April to September broadening top pattern. Importantly, the market also pushed up and away from the bright red middle time below, currently at 25.38, of the late June to late July bullish shift pitch walk, and towards the bright red upper time, currently at 25.38. It's not 25.38. It is at 26.13. Get that right, that'd be a good idea. This time the pitchfork has guided price. This pitchfork has actually guided prices higher. It's been guiding prices higher throughout the summer. Now we still have overhead some potential targets topside for the original move out of the broadening top pattern. Thus a primary target X would be in the 26.28 area, which is doable at the moment, with a secondary hard to reach target X1 up in the 26.96 area. Now, so far today, a new higher high today, piercing the recent 50% projected Fibonacci line at 25.79 and that older 100% projected Fibonacci line at 25.87, but having a hard time staying up there right now. We next have a lesser recent Fibonacci line at 26.02, which we've not tested as yet.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.